Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, can hear you loud and clear, Coach Jay. Welcome back at the buzzers to a very volatile, thin day. For
Happy,
those of you who wanted volatility, here it is.
right at your doorstep. Happy Tariff Tuesday. Welcome to all of our buzzer beaters to At the Buzzer. Coach Paul is a bit robot-y.
Okay, checking.
Andrew says good audio video. Let's see. We'll run with it. We'll do it live. Welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the day. May talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. Uh, this is our first time meeting. I'm Coach Jay. I've been a Top Step performance coach since June of 2023. Been trading for the past 13 years and in the futures markets for the past 6. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I have been involved in the futures trading industry for 4 decades. I'm here to share my experiences and hopefully help you become a better trader.
Awesome stuff. And you are all our audience. Thank you for joining us today. Hopefully, everybody had a good trading day today. Let us know in the chat, were you up on the day, down on the day, anything that you learned from the day? Maybe you stayed flat and stayed out of the volatility. As we can see, I was down for the day, got a little bit aggressive early, coach. And sometimes the markets let you know when to sit down. And that's exactly what they told me today. Uh, that was the market stopping me out, being morning. Uh, but it is what it is. We move on. We learn from our mistakes. We learn from our uh, know, faults, and we keep it pushing. Um, but let us know how you did in the
Well, that
chat. Go ahead, Coach.
that looked like the buyers and sellers meeting today on both sides. It was not. It was violent action today.
Yes, it was. Yes, definitely was. Maybe perfect action to kind of scale down, size down. We'll talk about that a little bit. But let's get into the news. As far as planned news goes, there wasn't too much that was going to affect the U.S. markets early. As far as planned news goes, we know there was a lot of tariff talk today. We do have some numbers coming out later in the week, some services composite PMI numbers, and then, of course, non farm payroll on Friday. But all of the talk today, all of these red indications that we see here on Financial Juice were about tariffs. Tariffs going into place. Trump is to move. We can see it here. Trump is to move with Canada and Mexico, but not all the way. Tariffs compromise announced is likely tomorrow. Uh, it's a lot to keep up with, to be honest. And if we're talking about, how do we trade it? Identify the volatility, find your opportunities from there. We're going to talk about trades that, if it was tariff day or whatever other news, the trades were there, the setups were there, based on what we talk about every day. The difference is the added volatility with it, Coach. I think at some point during the day there was anywhere from an 8 to 12 tick spread in the Nasdaq. Which, if you're trading a
Was it
live
real?
account, yeah, in the morning, if you're trading a live account, uh, am I just willingly taking an eight tick drawdown on my entry? Probably not, because it's 8 ticks on the entry, another 8 to 12 ticks on the exit. Uh, I'm paying 4 points just to be in the markets, uh, and it might not be worth it at that time. So keep that in mind with your position sizing, maybe scaling down. Go ahead, Coach.
Well, scaling down position sizing. It all comes to volatility.
Yep.
Volatility for everyone involved in that market, whether it be mini Nasdaq, gold, bonds. Um, that's why I focus on the average true range. And we'll go more into that, but the Nasdaq today, coming into the close, in the 30-minute, the average true range was 130 points.
It's a lot of points.
That's a lot of money. That's the half hour. Okay, let's look at the 5 minute. 65. Now, if you're not paring down, you're taking bigger position size relatively. And if you're having trouble or you're getting wild swings in your equity, that's the direct result. That's what we mean by pare down. Um, like like I said, one mini on a 5 minute chart is 60. That's what, $1,200, $1,300. If your account size is 3,000, you're trading minis, you're gambling. So you're you need to have dynamic position sizing that's tied to the volatility. So, especially in these swings, what was it? The last half an hour, what we broke? We broke almost 300 points. 300 points is 1,200 ticks in a half an hour. So
Pretty big.
adjust.
Pretty big move. Let's go through the quote board real quick before we get into the markets. There are 35 different markets that we can trade with Topstep accounts, not just the equities. And I saw some traders, mentioning crude oil and other assets that maybe weren't as volatile. And if you're struggling with trading the equities, consider trading something else. To the downside today, we had the ultra bonds down 1.35%. We had lean hogs down 1.85%, and wheat futures, our biggest percentage mover to the downside, down 1.92%. To the upside, we have micro Ethereum futures up 2.22%, micro Bitcoin up 2.29%, and natural gas, our biggest percentage mover to the upside at 5.58%. To talk about our big four, we had crude oil down 0.89%, the S&Ps down 0.49%, gold up 0.83%, and the NASDAQ up 0.46% to round out our big four. I have a NASDAQ chart up here right now. And let's take a look at what happened today. Uh, Overnight session. We talked, I was doing slow markets last night, talked a lot about this being a range bound session. And this is like, put this in a textbook. This market isn't going anywhere. Some of the trades we talked about taking last night, coach, were, the extensions out of this 30-minute range with this VWAP pretty much being exactly, sitting at 50%. These are nice range bound trades. Now, from this low, right, on this extension of the range up to that high is 115 points uh,
At night.
at night. Um, those are pretty big ranges. If I'm taking a trade entry on the 3 minute, and I think one of the first trades I took yesterday was in this practice account, we saw whatever this volume was kind of push, looked like it was going to push lower, didn't drag this VWAP lower. And I'm looking at this like, this is a range bound market. So I'm taking along here. Stop could go 2 ATRs, 44 points, and you get your 2 to 1. Right, this is an 80-point trade at night. Now you had to wait for it. It took a full 2.5 hours to get to the other end of the range. But this could have been your whole day. Right now, if you're a trader that trades slow markets time, maybe you want the less volatility that slow markets brings, and you don't want to look at the New York session. That's a pretty damn good trade. I would take 80 points as opposed to whatever I got here today. Uh, but pretty flat markets, and I think maybe everyone was waiting for the president to wake up and hear what he had to say about tariffs, or waiting for tariff day to start. Right, you go to sleep early when it's Christmas time because you're gonna have presents under the tree. Uh, I think a lot of the volatility was waiting for the market to open up. Uh, Go ahead, coach.
Well, what you just said is, I maybe this is I'm going to coin this phrase, terrifying trading. Um, like you said,
Terrifying.
Terrifying.
That's good.
So that's what we are. We're in a terrifying uh, market defined by whatever tweet comes out, except for which will come Friday. To me, is the next real big number. That's um, the unemployment number. But what time did we start breaking out of that range? And
Uh, really started breaking out. This was around 5 a.m. Eastern time. Right around 5 a.m. Eastern time, we started to break out and
so
hold outside
Europe
of that range.
in Europe started selling. But you know what's interesting? Like you said, there was volatility overnight in price, but not in volume.
Right.
So you were talking there was a 12-point spread between the bid and offer and the NASDAQ today. So can
12
we
ticks. 12
assume that
ticks.
12 ticks? So 3 points. Can we assume that market makers are widening their markets and paring down on their size? It's a direct correlation. It's if they're doing that and you're not, you're absorbing the mess that they don't want to handle. That's a direct reflection in volatility. Um, but I found it really interesting is the last night you said it was ranges, but look at the volume below average until
Yeah. Below average
there was
until
that one big. Was that a J trade to the sell to the buy side? We
which
had
one?
one
This one here?
at the highs going back to the left. There's a big buy candle. You can't see it here. You got to go left. There it is. All right. Is that
Yeah.
when is that failed buying? Um, that took a long time. So where look at that volume. What but what was the result of that buying volume?
Really nothing. No follow through. Kind of just settled. VWAP stayed a flat line. There was a decent trade after it. There is still 50 points, and for an overnight trade, that is a lot. But the follow through on this is just a lot less. Right? We can see prices going up, volumes coming down, and then we kind of just float right back into that range until we see some volume bring us out of it. Uh,
Yeah. But that volume still for the most part at night was lower than average volume, but the ranges were bigger than normal. So, it's less it's like definition of less liquidity.
right.
So the theme today is, you know, paring down your risk. The best way to do it is paring down your size. You can pare down, okay, let's go to the other side. Well, I only want to take less um, size on my stop. And this leads to frustration because you take less size on your stop with higher ranges, you're going to get stopped out a lot. Or you can go smaller size with the regular size stop or bigger stops that are tied to the average true range, which is much more dynamic than I only want to risk $100. If you're having that turbulence, getting stopped out a lot in this market, it's telling you to pare down, go to a smaller size, and widen your stop. Your risk amounts are basically about the same if you do that than they were a month ago.
100%. Here is the New York session open. This purple box here. We have anchored VWAP to that, which is this red line. And then the yellow one right above it is VWAP from the session open from last night. We can see where we kind of rejected this open. Even the open, right? This first 3 minute candle is 108 points. Shout out to Nick and Jerome that were trading on fast markets and just staying out of this, right? I heard Nick mention it first. He was like, "There's an 8 tick spread in the Nasdaq. I'm not trading this," and that is just the sign of a mature trader, where it's not just some people say why do you look at the depth of market? Why do you need to know? Uh, you know that's a very mature decision to make, to say, hey, yeah, these markets are running. If I'm just looking at the candlesticks alone, and maybe it's not a consideration that you have to make if you're trading with simulated fills. But if you're trading live fills, you have to take that into account. Um, if there's not another order to get filled within 4 points of where I'm at, I got to think about that, right? So, you know, from a price action perspective, we traded up towards VWAP, which was at this 20,400 level. Uh, didn't find any convinced buyers above it. We can see this anchored VWAP from the New York session open didn't leave that 100-point range, which is a pretty big range. And then we just fell right back through it. This move to the downside, it's 300 and almost 350 points. At this point, this white line here, 20,060, was 2% down in the NASDAQ for the day from settlement. The reason I put this on here is when we start to get near some of those, percentage numbers, right? 1%, 1.5%, 2%. I like to look to see whether or not the market's going to respond to them. I'm not the only one that is watching the Nasdaq be down 2%, the S&Ps be down 2%. So we'll see a reaction, right? And think about what happens when the S&Ps are down 2%, the Dow, the Nasdaq, it's all over, you know, Bloomberg, it's all over MSNBC, markets in turmoil, all of that stuff happens. Go ahead, coach.
Why are they watching those? Why are people watching those channels and not Top Step TV?
I mean, because they want the information late. They want the information late. We're giving it to you in real time. This 20,060 level, one, it becomes a downside target if you're a seller, right? Just looking at, okay, we're down 1.75%. Is there a possibility that we go down 2%? What's that level? And I just watch the market as it gets there. But then again, you could see the opposite reaction, right? We saw buyers step in. We didn't necessarily get that exhaustion move that we kind of look for, but what's what doesn't happen is almost as important as what happens. Uh, we as convinced as these sellers were to continue pushing this down, when we got near that 20,000 level, 20,060 level, 2% down, they were less convinced about it, right? So maybe we didn't see that exhaustion move, but we saw the selling slow down, right? And they met some buyers here, some pretty consistent volume at these lows, and that ended up being the low for the day, and then just an amazing rally, taking back the entire move. And some of this move, I think we were kind of looking for, uh, where we've on a daily chart, and that's a interesting daily candle we got there. Uh,
Yeah, with high volume, the highest volume since wow, since that gap down.
yep, yeah, highest volume in the Nasdaq, almost a million contracts traded today. A lot of it to the downside, a lot of indecision here. We're still under that 200 moving average on the daily, uh, and this, just very interesting, very interesting. There's still, in my mind, the potential to trade back at least to 50% of this entire down move, but the market's got a lot of work to do to get up there. A lot of indecision with all the volume that traded here, and I'm honestly I'm excited to trade the rest of the week. Uh,
Boy, look at that can't. What was the high within ticks of the 200-day moving average?
yep,
That was just about an hour ago.
yeah,
Yeah,
y- yeah. That close was insane. Shout out to Dolby who just got on the right side of that trend and held it. If you find yourself in a move like this, we talk about volume, coach. That high was right below that 200-day moving average, and we sold off in a half an hour. Sold off 400 points. Uh, find yourself on one of those trends. Just don't get off.
Is that a 3 candle reversal?
This is a 3-bar reversal up here.
3 bar reversal. Nope.
Shout out to Dakota. Uh, and there you go. 3-bar reversal. Could be as simple as that. And we trade right back down to the opening range. Isn't it funny how that works? Uh, and then another bounce from that opening range, 160 points to the other side. These markets are insane, right? They're presenting a ton of opportunity. Do not feel like you have to over leverage. There is a ton of opportunity out here. I had a losing day. I can't wait to just put this day behind me and trade tomorrow. Because if the markets are going to keep presenting opportunity like this, uh, we should take advantage of it. Andre said it at the end of the the daytime show. He said this volatility isn't going to last forever, right? So embrace it while it's here. And I think that there's two approaches. You could either be afraid of it and not trade it at all, or embrace it and trade responsibly in it. Um,
Well, would certainly hear. Um, Interesting that we're sitting under the S&P under the 200-day moving average, and the NASDAQ, we have been under it, haven't we?
yeah, a couple days now. A couple days now. Yeah, it's been a couple
And
days under that.
we notice the volatility, we've talked about this before, comes in stocks on the downside.
Yep.
It's really important to know that if you're going to trade equities, this is I'm not comfortable with the market hates uncertainty. Like what? It's nothing but uncertainty. What? It's
Yeah.
I struggle with that. But it doesn't spend much time underneath this 200. The more time it spends down here, I think the harder it is going to be turning back up.
Yep.
Um, it's accepting under. So far, we've had it'll be one day. The Nasdaq, I think it's 2 or 3 days. Um, but this is why we have volatility here. Um, and it's not going away in the next week. So get on board.
Get on board or don't. Right, trade something else. That's okay too. The S and P's
Oh,
looking at that volume. That was the highest volume we've seen since August of 2024. Uh,
oh, we could have a daily J trade. Let's keep an eye on that.
that is pretty significant. Pretty significant. Highest volume we've seen on a daily. And sometimes we'll get, high volume on rollover and things like that. We're not rolling over yet. So uh interesting.
And
We'll be
with that,
watching this one for sure.
these tweets have been bearish. Well, those tweets can, they can go fly both ways. I'm going to find a settlement. You know,
Yeah.
we're going to accept. They've countered with X.
It's happened
So
already, but it's happened already once this year, right? We
okay,
we were
yeah.
already supposed to have the tariffs for Canada and Mexico a month ago. Market sold
This
off.
time
They
for
said, "Wait,
sure.
yeah." They said, "Wait, we'll delay it." I got all my bids in. Thank you. So now we can go back up again. That's just conspiracy theory hat talking. But I think someone in the chat just said that they might be delayed again.
Why not? Really, why not? Why wouldn't it happen?
Right.
Anything can happen. We say that all the time. But I found this interesting. That big volume. Now I don't know if this volume. We're starting to roll. It's March 4th. So the roll might start affecting the volume, especially on the daily.
Yep.
Why? Because institutions are going to, if the, on a roll, the open positions, not the day trades, you have no effect on open interest because you're not allowed to carry it overnight. But large institutions will roll large positions, hedges, whatnot, and they're going to roll that from March to June, and it's going to reflect in volume because they don't trade day to day. So these volume statistics can get skewed. And I'm interesting, but does that matter on a J trade on a daily? Well,
Nope.
let's tune in and find out. I don't. It's very interesting. This could be the bottom of a huge move up.
That'd be nice to
Been
see.
done before.
That would
I
be
would say
nice.
it's an odds-on bet that that's going to happen.
Huh. Moved my moving averages here. All right, let's take a look at gold. As soon as I fix this indicator. All right, let's take a look. Linus Rain, have a good one. And his royal said, "The chart is the chart. The rest is just noise." I agree. I agree. News expedites the move.
Absolutely.
Fundamentally or technically, these are all setups that we've seen before. We probably could have spent some more time looking at the equities and exactly how they traded technically, but it's the same patterns that we kind of see all day, right? Is there a volume reversal? Is there continuation? Um, Pretty clean charts. Let's look at gold here. Gold has, pulled off of this all-time high, 29.74, 29.75 area. We traded below the 220 moving average for a couple of days, and we're back above it again. Back above it, closing at 29.25 today. Uh, Back on the bullish train to 3,000. Uh, I think, Coach. What are you seeing here in this gold chart?
Well, this is the half an hour.
Yep.
Let's start from last night and VWAP. Wow, that traded both sides from last night. I mean, I'm going to say that. Okay, let's say you sold it last night. From my unit of measurement, two ATRs, um, and aim for four, 2 to 1. It's, but don't do it on the half hour. Do it on the 5 minute, 3 minute, 1 minute. Um, so if we started last night on that, we had early selling, broke out VWAP and the range, and broke pretty hard.
Yep.
Um, Now, as a day trader, you're trading at night 2 to 1. That breakout, yeah, you got it. And it was probably worth $250, $300 with one or two micros. Let's do the math.
This is an 11-point move here. At this point on the 3-minute chart, the ATR was 1.4, so your stop would be 3. Let's say you got in short here at 29.02. I was looking for longs last night during slow markets, but 3-point stop puts you at the other side of that opening range, and you do get a 6-point trade here. It's $600 with a mini, 60 with a micro. You could do two, and you were risking $30 or $60.
Oh, maybe yeah. You can line it up, but it's there in day trading. Uh, um, Overnight trade. Let's say you did two micros,
Right.
gold. I don't know. Not bad. That adds up. You're done. Go to sleep. Have another beer or cocktail. Whatever. It's done. Well, I'm just looking at without a plan. What do we end up doing? We try to get more than that, or we find other trades. If you're trading more than in trades, if you're trading more than 10 a day and you're in one market, you're going to get whiplashed. Pick a spot, follow a plan. This is classic action from last night for that'll ruin you because it came right back
Oh yeah.
and
Yeah.
then some.
There was a question last night, during slow markets where this trade said to short it in this time frame, right? And the question was, why aren't you shorting it? For me, it's because on the higher time frame, we're starting to trade above this 200 moving average, and I want to buy it. But that's not to say that this is not a trade, right? We talk about it all the time. I don't have to have the direction of the market right in order to make profits. Here's a 10 point, 12 point move. That's $1,100 with a one lot mini, $100 with a micro in a half an hour, right? And I had the direction completely wrong. So you can take this trade. The way I looked at this, the reason I didn't take this short and I was looking for longs was this felt like counter trend price action for the eventual move to the upside. Uh, because of how gold has been trending over the past couple of days. So I think it's important, coach, to know where your trades fit in what the market is saying. And if I was looking for a 10-1 on this trade, I'd probably end up upset because I wasn't looking at what the market was saying. I just wanted more money.
You wanted. It wasn't
Yeah.
provided. The market's not here to provide you with what you want.
You're gonna eat what I cook. That's what my mom
Oh,
used to tell me when
wow.
I was younger. It's like
Oh,
you're
man,
gonna
you
eat what I
said
cook.
that. You said that just like a mom.
That's
Are
what
you
that I
gonna
mean,
go
I
hungry?
I could hear her voice in my head. You're gonna eat what I cook. Oh, well, or you're gonna go hungry.
Yeah. Or cook
Cereal
for
in
yourself.
the cereal in the cabinets. Uh,
This yeah,
um,
yeah.
but yeah, if you're expecting the market to do something that it's not willing to do, uh, you're gonna be upset. But it did provide some opportunity here. And I mean, this is just a really great long, right? We held above that 200 moving average. I ultimately didn't get into the trade. Got in it kind of late. I fumbled the bag today trading gold, but that's all right. But it was there, right? Hold that 200 moving average. Set your stop reasonably. And now, if I'm thinking, let's buy right off that 200 moving average, I'm on a 30-minute chart. I'm risking 10 points. Uh, 10 points is somewhere down here. Trade the proper contract size to facilitate that trade. And then if you get in the flow with what the market is saying, you have a 4-1 at these highs, and you could take a 2-1 before the move really even started going. So really nice move in gold. I am bullish gold. Uh,
There you go. And, like I said, pick a side. I really mean that. Best advice ever was told to me. Pick a side. I don't here, you wanted to buy it. There was opportunity on both sides. A bigger one was on the buy side. Why?
Higher time frame
It's an
setup.
uptrend.
Yep.
Yeah, it's an uptrend. There's more, but um,
I'm cracking up laughing. Ronan said we all had the same mom.
yes, we did. You got my
That's
attention.
that's funny. It's just like, oh, I'm sorry. But yeah, pick a side.
I'll eat
Uh,
it.
Higher time frame trend said upside, and I think it's continuing to say upside. I am looking to buy gold, and not just a blind buy either. We've seen this market kind of consolidate and make a decision about what it's doing here. But if it's going to make up its mind and make that run to 3,000, I want to be in it. Now, that's my opinion. The market's going to do whatever it wants, and I have to fit my trade ideas into what the market is actually saying.
Yeah.
Any, anything else you got on gold,
Wait.
coach? We can get to some questions.
Nothing else. Let's get some questions.
All right. Paul H. First question here. As an experiment, I plan to take out a small combine 50K and trade one trade per day with one micro, one entry, one exit. Any comments or suggestions? Comments? Let us know how it goes. One trade a day with one micro. How it goes. Uh, my only question would be, what would be the trade setup that you're looking for? Are you saying, hey, what I have, six different playbook setups that I could take, and whichever one shows up first, I'll take that one? Are you saying, I'm only taking opening range trades? I'm out, that would be my only question. But let us know the stats on it. I like the one micro. I know Dakota put out that challenge on Twitter the other day. So I like it. What about you, coach?
My brain is crunching there. There's many different. I'd be interested on your results. My first gut reaction is Why limit it to one trade a day? But
Yeah,
I,
that's
that's
it.
my first reaction. But do it. It's a great experiment.
True test of your patience. Say that.
Yeah,
Test of your patience.
I'm thinking about the return factor too. If you want to pass the combine and make money, but it serves as a principle.
I mean, if you catch the right trade in the Nasdaq with the micro, you might be able to. You put up some big money with a one lot micro and a 400 point drop in the Nasdaq if you catch it. Hold on if you do. Um,
Yeah, at the right time, like in this volatility, yeah,
right,
what you should be trading.
right, right.
I mean, really, um,
Uh,
keep us appraised.
just a reminder to everyone, Boomer Brian, I can see it as well. John Kelsey asked the question. Honestly, I didn't even realize there was a congressional address today. I did make some plans. Unfortunately, I got plans tonight, so I cannot be doing slow markets. We'll talk about it tomorrow. I will be on Topstep TV for the rest of the week. I think there's another 16 hours of Jay on Topstep TV this week. So I'm gonna take a little bit
Where's
of time to myself
are you
tonight. Go ahead, coach.
are you going to go to Congress? Have you been invited to sit in the gallery?
I haven't gotten my press credentials yet, but maybe next time. But no slow markets tonight. We'll be back tomorrow uh for slow markets. But I will be doing the opening call, be on fast markets, power hour, another segment tomorrow. You'll hear a lot of me. I gotta drink some tea though. Save my voice. Uh,
And
all right,
finish your dinner.
there we go. Uh, Luca Brazzi, can you go over the ATR and how to determine stop size? ATR is, I lean the wrong way. We got this
Luca
value right.
Brasi?
Yeah,
Oh, man.
Godfather character, right?
Better answer this question correctly.
Right. Uh, so we have the ATR. I don't do any calculations. I have this set to the last 14 candles, and then it's going to adjust based on the time frame that you're looking at. We can see that in the Nasdaq, it adjusts as I move this, right? So it's going from 40 to 50 points on a 3 minute candle. And then how we're using that to determine a stop is whatever that value is by the time you take the trade. So if I took a long right here in the Nasdaq, the ATR is 62 points. That means that on average, the last 14 3 minute candles have been 62 points. A lot for 3 minutes. And what we're suggesting is that stop be twice that value. And that's a suggestion from Coach Paul. So that means you're trading with a 125 point stop. And you're probably looking at me like that's insane, right? That's almost as close as, trading with no stop. Can I afford 125 points? And maybe not with minis in a Top Step account with a starting balance, but with micros you might be able to afford it. And the other side of that suggestion is looking for a 2 to 1. And again, this is all coming from Coach Paul. So if I'm risking 120, I'm looking for 240 points, and you get a 240 point trade with proper trade location. Let's say I didn't sell it, I didn't buy it right at the lows. Let's say I bought it here. I'm still risking 120. Sit through a little bit of drawdown, right? I'm 70 points in drawdown, but that's okay because I've already measured that. I get a 2 to 1, 3 to 1, 4 to 1, however many to one you want, if you can manage the trade.
Um,
Anything else you got on ATR, coach?
um, yeah, the two ATRs, I don't get stopped out very often. I'm gonna repeat that. I did the tight stops for a
Mhm.
while. It was a 1,000 cuts. The natural ebb and flow of that market is what the average true range is, right? It's right now it's 60 in the Nasdaq, and every 5 minutes, and I'm stuck on 20 point stop. All right.
Yep.
Let's do some math. I'm going to get stopped out a lot. And it gets, and if I don't change my size, this is where I'm going to get knocked out. Um, so if we talk about two ATRs, if you can't, doesn't mean you have to wait to get stopped out. Something else could happen. VWAP could turn. You might have some other information that says, okay, I don't have to get wait for the stop. I'm out. But to me, uh, the other side is you have to be willing to take a lot of, which are not small losses at 20 points in the NASDAQ.
No.
All right. I mean, it's so that's why I do it. If you're not comfortable with that, I, I completely understand. But start looking at it to understand if you're getting stopped out a lot, it's yours. It's and I've done this. I only want to take this amount of risk, but if I do it real quick, I won't have much exposure, except if unless you're have like um an 85-90% hit rate, then you're going to get, which is rare. If you're doing that, please don't tell anyone. Have at it. Keep doing it. But the, the law of averages says, well, we're not operating at that um, hit rate.
Right.
So if you're, it's really important. What is measuring what the market's doing, not what you wanted. I it's like I've done this. So you could go one and a half, play with it if you're not comfortable. But we talk about principles of winning traders. Mm, one of them is predefine the risk. And there is one way. I only want to risk 20 handles, or 20 ticks. Well, what is that in today's market? You know,
Right.
so and accept that risk or don't trade it. Um, I find it very helpful. Um, so we said we would talk more about it. I guess we have. So
There we go. Do you see this volatility in equities a direct correlation to liquidity issues? That's for you, Coach Paul.
that's a great question. I'm thinking that myself.
So Linus Rain asked a question not in the YouTube chat, but in the VIP channel that I kind of do want to get to as well. And it kind of similar. But what do you think about that, Coach?
Um, I think there are some issues. I think that one thing has changed is 0-day options,
Mhm.
and we've heard plenty about the gamma trade, um, and gamma levels. Well, that short term, those short term options are taking volume to another derivative. Like really, this is like the fourth level of derivative. We're at the third. There's the cash, right? There's the indices. Then there's futures on that indices, and then there's 0-day options on that. Um, so I have a feeling that the liquidity is being spread out. The biggest opportunity right now is fading 0-day options.
Mhm.
Big players are there taking it, going, and they can. They- I, maybe I'm wrong, but there's a very no. There's a very high probability you can't beat them. They have volume. They know if they're going to have big orders that day on either side. So, why, without getting way off the subject, I believe it's thinning out the available liquidity or trade capital. And it's being reflected in futures. I spent many years in the bond options, um, and the bond options are a derivative of the bonds futures, right? So there would be periods that of high volatility where bigger players didn't want the volatility in the futures. They wanted it defined in the options where it was willing to risk. You could do that by buying an option. Um, that liquidity would in turn go back into the futures, the bond futures. Um, and when the volatility gets heightened, the liquidity gets stretched. And I think we're seeing that's a great question. Because it's there's only so much capital that's being, and so when we saw this move like this afternoon. Interestingly, it was over VWAP from the opening once we closed above VWAP. So you have a gamma play where people are leaning the wrong way, or it gets exacerbated, and all of a sudden that gamma, which were whose short calls from the because there's 0 day. That's why this gamma is so important. And it's really important because the gamma is the rate of change of the delta, and it's so intensified with 0 day options that what looks like a small position becomes a much bigger position because there was a rally at, let's say, at 10 o'clock this morning. If you were short what were 50 delta calls on the opening, are now at the money and now in the money. The
Right.
hedging goes, and I think maybe this was a long explanation. If I lost you, I apologize. But yeah, it's I think it is. It's causing liquidity issues. We saw that, and the whichever big report that was, where it was 15 seconds, there was a 200 point move in the NASDAQ, and there was only like 300 contracts traded. What was, I mean, that was, to me, that kind of showed me concern.
Right. Similar to what you were saying there, Linus Rain asked a question: how can we, we continue to say that we have thin order books, but we just had the highest volume candle in the S&P for the year, and going back to August. That's exactly why we're seeing the price action that we're getting, because the volume has to trade. But if I gotta sell 100 and Coach Paul is only buying two, I gotta find somebody to buy those other 98, and they might be much lower, and that's why we're getting this kind of loose price action that we're seeing. That's why you can get a 400-point move in 30 minutes in the Nasdaq, right? Because the volume still has to trade, right? They have business that they have to conduct, but if there's no one on the books willing to take some of that, that's when we get this type of price action. Um, if we have thicker order books and volume is still trading, that's when we see consolidations, and we really have not seen. When's the last time we saw a really, I mean, outside of the three daily dojis, even then, those are still some decently big range days. But when's the last time we had like a tight consolidation on a daily? It's been a while.
Yeah,
It's been a while. We've been seeing some pretty big range
good
days.
point.
Uh, all right. There was a question about, what is your guys' motto for risk management in your trading, Coach Paul? I suggested to Wi-Fi Millionaire, not to lose more than 12% of your account in a day. And then some people are saying, well, 12%, that's huge. That is catastrophic. Shit hit the fan. I did everything wrong. Uh, but I don't want to blow my account loss. That's not, hey, lose 12% every day and then just and then figure it out the next day. Uh that's
Okay,
go ahead, coach.
I, I just have to go right. 12% is huge. I'm glad people are realizing that.
Yeah.
Yet, yet we see people all the time trading mini NASDAQ with 60 delta, or now I'm in option mode, or um, yeah, with 60 ATRs in a 5-minute candle. Is that bigger than 12%?
Yeah.
It's almost 50% of the
Yep.
account in 5 minutes. So I'm glad we're realizing, yeah, that's huge. That's when you stop. If you want to preserve the account, if you're there to go, oh, I just want to get lucky and get on a roll. Okay, well, this doesn't make sense for you. Um, I don't suggest it, but if you want to really manage risk and become a consistent trader, these are important principles. And I'm just really glad to hear that. Yeah, 12, but yet what the daily loss limit was 50%.
Yeah.
Okay. Um, Now think about it. You lose 50%, you got to make 100% just to get back to even. I know the math. I've done it even when I was younger. Like, but yeah, I'm, I'm glad we're having that conversation. That's a big, that's eye opening.
Yeah. 12% is a lot. 12% is a lot. All right. Get to some more questions. Any other markets that you want to discuss? I know we've been kind of just flowing, but any other markets you want to discuss? Billy, what's the optimal time frame for 2 ATR stop? Uh, I like to look at it on a 3 minute chart, but I trade the equities during the New York session, and that's a lot of volatility, right? So I use the 3 minute. If I'm looking at overnight trades, for example, that gold trade that we were talking about, uh, I'd use the 30 minute there. And then Scotty asked, Coach, and this is I'm going to throw this one back to you. Have you ever tested with 1.5 ATRs or a different number for that stop? Why did you settle on two?
Experience. I've run, I've, I did a lot of back testing. I don't know if anybody here does back testing, but
All the time.
um,
I haven't done it in a while, but yeah.
okay, it came, it's like the three bears. Wasn't too big, wasn't too small, was just right over a large data set. So some people go 1.5. Play, you know what? It's not, nothing is set in stone. I can tell you this: if it's one or less, it's too little. That part I will tell you. Um, so familiarize yourself with it, but it helps you set up a risk parameter that, what I mean by dynamic, it changes with the market fluctuations. It's, at night, it's going, like, watch it tonight. It's going to go lower and lower because and then in the morning, it's going to go higher and higher until it reaches a climax. But know that you need to know it to set your risk that's in tune with the state of the market in the present tense.
Uh, we were talking about back testing. Alex said, "Did I give myself homework?" I haven't back tested in a while, Coach. I know last year we did a lot. I think I did that. Can't even remember what test it was, but I looked at it had to be like 1,000 days of charts. I'm in execution mode right now. Uh, if I get to a point where I see something that I'm like, hey, that's interesting, I want to see what the data is behind that. When that happens for me, I like completely go tunnel vision and cannot see anything else outside of that. And I don't want to be in that place right now. I just want to be in a place where I'm executing good trades. So I'm not even thinking about that, right? Everything that I've tested and worked on over the past couple of years, I'm just in uh, execution mode right now. Uh, All right. Any of the markets you want to discuss, Coach? Anything on your scouting report before we go?
Bonds or 10-year, either one.
Look at the 10 year. think it fits our accounts better.
Okay. All
Hmm,
right. Let's get our friend, the white line.
interesting.
Yeah, it's at a flip or fly. Um, this has had a pretty good run, and that was a direct correlation to the NASDAQ rally was the 10-year break from the highs. It was almost tick for tick. Um, Now, two things looking at this, is it on sale? Is this a sale? Well, let's see if tonight I'm going to watch to see if it closes above that 200. Um, Pair it to like a 5-minute chart, a shorter term chart, 5, 3, or 1. But it moves slow overnight. So I'll still look at it. But this is still an uptrend. Let's go to the daily. I said we're at inflection points here. Um, let's look at the daily with the 200. Oh, look at that candle. All right.
Pretty ugly daily candle.
And we settled under the daily. So I'm going to go with the flow. This could be a great sell.
Yep.
And you know what? It could start out that way. And on a day trade, I don't make 2 to 1, but I lose 1. Okay. I'm willing to do that. But if this is yeah, this is at a big point here. When's the last time we were above the 200 daily?
Uh, this is going back to October 2024.
Okay.
Would be interesting. Wi-Fi Millionaire says, "How do you trade bonds?" Same way I think you trade any of markets, right? Charts are charts. I think the one thing if you're switching between markets is it's good to know what news might affect the market that you're trading. Even if we don't trade news, right? If there's a planned headline, you want to be aware of it if it's going to have an effect in the market that you trade. For example, if you trade the agriculture products, knowing when that WASD report comes out. But then from there, you know, apply the same technical analysis that you would do with any other chart. I would suggest that if you're looking at a market that you have not traded before, uh, do it in a practice account, right? Don't trade a market that you haven't traded before and have expectations to make money from it if you're still learning it. But I think what you'll realize is that these markets trade very similar to everything else. Also, if you're going from trading the NASDAQ to trading the 10-year, expand your time horizon by like 5, right? Multiply it by 5. Whatever, yeah, if you look like I'm getting a 100-point move out of the NASDAQ in 3 minutes, that same thing might not happen in the treasury products. A lot more liquidity there, though. Don't gotta worry about
Wow.
thin order books.
Oh, yeah. you, you might have the opposite. They might not fill you because you're annoying them. Um, wow. Look at that there. That that it could have been a J trade. So let's say,
This is the
how do you
continuation
trade it?
trade. That's the
This is
continuation.
now. It didn't take that high out. It's a continuation trade. We start from there. So why I bring that up is that could be NASDAQ, that could be 10-year, it could be gold, it could be rice, it could be orange juice. Well, probably not orange juice. It doesn't trade that much.
Be a lot of gaps in
Um,
the orange juice chart.
yeah, but the principles are the same. So ask how do you trade the 10-year? Understand the tick value of trading in your practice account. It's a lot less volatile than NASDAQ or S&P or any of the equities. Um, and trade it during the day. You don't trade it overnight.
Yeah, I'm gonna be on the opening call and fast markets with Jack tomorrow. Guys have heard Jack talk. Jack is the bonds trader. Let's see if we can put something on, right? Put something on in the bonds. It opens up a little bit. The volume starts to come in before the equity open. I'll see if Jack wants to give a little lesson on the bonds while the Well, we take over the show while the team is away traveling. All right, we got 15 minutes left, or we can wrap it now, Coach. Any other markets that you want to talk about? Anything else that you have? I think we got through all the questions.
No, that's it for me. Um, oh wait,
Oh,
let's look at Bitcoin. It had a big move again today.
all right, we'll go Bitcoin, and then I saw someone in the chat put cattle out there. Uh, quick nod to Coach Hoop trading the meats. Uh,
Yeah, it's Coach Hoop probably.
Cattle has been in this downtrend. Again, if we don't know what this chart is, look at all the technical stuff that we've been talking about, right? We have a market that's in a downtrend under this 200 moving average on a 30-minute chart. Uh, we've been selling off. We got kind of extended from it. And here is the first 30-minute open in cattle. And again, this is just a chart, right? I'm not even quoting prices in cattle right now. Just looking at what the candles are saying. We had some high volume on the open. That's our opening range. Volume could not break the low. Flat VWAP tells us range bound market. Maybe this is an opportunity to buy. Am I cherry picking this example? Yes, but these patterns play out all the time, right? We see the low of this opening range hold. Maybe we want to include all of the volume that traded on that open. So we include these first 6 minute candles, uh, first 2 3 minute candles, and then same thing, right? Range bound market until it's no longer one. I think on a higher time frame, let's look at it daily. What are you seeing on this? Oh, what's that? Someone said, what do you see here, coach?
I see a white line and a double bottom off a white line. Um, I'll keep it that simple. And what do we go to, right? To the 20? Um, seriously, let's look at a 5 minute on the opening today. Since yesterday, we bounced off that 200. Let's look what this is a 5 minute, very similar to the 3 minute, right? But once again, all that selling did what? Hit the 200. If we look and get those, well, if you know those levels, that they're important, especially
Right.
daily levels. We're seeing it in a few different places now, right? Here is this cattle, 10-year, probably bonds, 5 year, all the interest rates, S&Ps. Those levels, like right there, even do you want to sell it? Our job is, especially in cattle, it's professional market. What do I mean by that is how many people have traded cattle today? Okay, it's professionals. Not I mean professional traders. It's the users and the end users and producers of livestock, and so there's not much um, setup on in someone's day trading cattle.
Not a lot of speculation.
Yeah, but
Coach Hoop might be one of the biggest cattle speculators out there, right? And you know him.
so there's not why I say there's not a lot of noise. It's actually there's probably zero noise. But once we see that on a 5 minute touching, and if we know, well, alert ourselves that the 200-day moving average is there, we can set up to see what happens when we hit it. Now, what happened? Oh, that's Bitcoin, right?
Oh yeah, this is Bitcoin. I can go back to cattle.
Yeah, just interesting when, okay, we know it, but we saw that example, and now we can put a VWAP and see what happens on when it hits it. We could go down to a 1 minute. You could, I don't know, maybe go to it. 30 seconds doesn't matter, and especially in cattle. Uh-oh.
Sandman's coming
All
to
right.
pull us off the stage. But there you go.
Now, once with that, we break the high. We have a principle, a plan. We break the high. We have a J trade, which is personified even more by the fact that it hit the daily moving average.
Right.
Now, you don't right away. You don't. I wouldn't just buy it because it touched it. Let's see how it reacts. Read and react. Even after the first 5 minutes, wow, look at that volume. All right, the sellers. Can we define when the sellers are done? Well, that's that is what a J trade does. So a great example.
Good stuff. Good stuff. I got nothing else. There was a question, what time is Trump speaking tonight? I think it's 9 p.m. Eastern time. Just watch out for that volatility if you're trading tonight. As far as news goes, we don't have much as far as planned news. Uh, yeah, 9 o'clock Eastern time tonight. Trump addressing Congress. And news tomorrow, we got ADP unemployment change and then some numbers into the open. Trade well through it all. Manage your risk. Coach, you got anything before we go?
Manage your risk, and we will talk tomorrow.
Talk to you all
See
tomorrow.
you
Thank
later
you.
tonight, Coach.
No, I'm not on tonight. I'm off.
Oh,
I'm
that's
off.
right.
I'm off.
You're going to be in the Congress. Better get on that.
I'm off. I'm shutting this down. I don't think I'm gonna look at charts until tomorrow morning. But have a great night, everybody. If you haven't done so already, hit that thumbs up button, and we will see you all tomorrow.
All
Bye.
right. Bye.